Hello, everyone. Happy Thursday. Unemployment Thursday. Continuing unemployment edging up still. Going to get very interesting real soon, I think. Good morning, Patrick. Good morning, Sterling. Good morning, Daniel. Hey, Richard. Yeah, if you're going to do any gift or something, don't do it on YouTube. Just wait. Don't do anything. Again, this information is provided free. I appreciate everybody who contributes. But you know what? I got to figure out something. Again, X is still not letting me live stream. Twitter, I don't know what's going on. YouTube. So we'll just figure out something. We will see how this all unfolds. And I need a better internet solution, or I need to move anyways, because again, when the cell towers near me, the only thing I can get is cellular internet at this point, and when the cell towers went down. So I am struggling. I mean, it's fine for trading, because it wouldn't be fine for scalping, but it's fine for trading. But I don't think most people should be scalping. So, a lot of techs, are they confirmed, triggered, or potential, Daniel? Because remember, potential double bottoms night never confirm or trigger. Just as we had a lot of potential tops on the way up that never confirmed or triggered. Now, NVIDIA did trigger a double top, so we're going to have to see. And I'm also watching, so we could get some of these potential double bottoms triggering, and that would be for a bounce play. I'll go exactly through what I'm watching. I'll go exactly through it, because after the sell-off yesterday, especially in the NASDAQ, this is what I love. This is what I love, and I'll explain why. Good morning, Tony. Good morning, Royal Palms. Good morning, Eric. Good morning, Jacob. Thank you. Potential. Very good. And I wasn't picking on you, Daniel. It's important to clarify, even in your own mind, because a lot of people think, oh, double bottoms, and then they just buy, even though they might never trigger. Because remember, it's like double tops. On a market that keeps trending up, you get a lot of double tops that don't trigger. So it's not like, oh, I got to sell early, there's a double top. No, it might just be a potential. Might never trigger. Remember, the trend is still technically up now. Price action yesterday with some of the rotation out of mega caps and AI makes it interesting. But this is the kind of stuff. This is the kind of stuff. This is why I like more natural price action with what happened yesterday, where we get a little selling pressure. Even if the trend's up, this is what you need. Good morning, Heinrich. If we have time, Royal Palms, you got to remind me. Well, I agree. And I'm supposed to be able to get 2 gig fiber internet. I'm the only house in the whole neighborhood that can't get it. The only house. And it said I even had it lined up to be installed before I moved in. So I looked at that. And by the way, the house I'm looking at potentially making an offer on, I've already confirmed. The first two, by the way, first thing I did, verify I could get high-speed internet. Because if I can't get high-speed internet, and I'm looking at larger property, farther out. So, you got to verify that. Second thing, which most people don't consider before you buy a house, especially nowadays, I called up insurance agent and got a home insurance quote. Why did I do that? Because A, home insurance is going through the roof. B, out here, especially being in the desert, farther out, there are certain areas that don't have as good access to the local fire departments. And your home insurance with fire hazards can go through the roof. For example, even though it's well over $1 million of property I'm looking at, I can still get home insurance at this one for around $2,000 a year. All right. on a 3,500 square foot home. But another one I was looking at, literally just a few blocks away, same size everything, because of its location to the fire department was farther away. It was over $6,000 a year. That's a big difference, because home insurance, and it's not going to miraculously go down. So it's another thing I checked. It's especially when you have a little patience in the housing market, you could do your due diligence. It's just like doing due diligence on a trade. The worst thing you could do is just rush in. I set up the trades before. I set up the targets, the stops, especially the stops, because if you don't know your stops and you don't have a rough target, you don't know your reward to risk. The worst thing you could do is put on a trade and then try to figure it out after. Like buy the home and then, oh crap, I can't get the high-speed internet. I can get home insurance, but it's through the roof. No pun intended. Actually, can't get home insurance because it's through the roof. So just like trading, big decisions in life, and trades can be big decisions. Homes are big decisions. Sorry for going off on the. Eric wants silver. Good morning, Anissa. NQ went right to his first target at 50% double top. I'm not needed anymore. Everyone is too good here. You're learning. And it doesn't matter if things go to target, it's learning that you're learning how to set stuff up. And you're learning how to manage trades, and you're learning how to come up with targets. And you're learning to come up with stops. Because the more you do that before you ever get into a trade, even if people are like, I couldn't get in that trade. It gapped down. For example, I'll get to that in a second. I'll show you some, but it doesn't matter. Learn to set up the stuff. Learn to set it up. And then you have to work on your execution and not panicking in or out and following through and raising stops and trailing stuff. All right. So we had initial jobless claims coming in higher. Now, some of that's probably due to Houston, the hurricane. So that's not my bigger thing there. But whereas the continuing jobless claims keep edging higher. Here's your then this is just a recent little chart, okay? But you see here, breaking out of a little sideways channel. So that's something I'm keeping a close eye on. What I'm worried about is unemployment can start unraveling early. And if the Fed starts cutting too aggressively, inflation could stall out in this upper 3% range, or even start climbing. That gets very stagflationary. That's the worst of worst. What else do we have? Oh, no, another side note. Look at the mortgage delinquency. This is your FHA. Now, this was a spike from the lockdowns and people being locked out of their jobs. But here, look at this. Look at this on a chart pattern basis. It's making maybe that's even a double bottom here that was confirmed and triggered a little pullback. So this is starting to climb. No, it's not critical yet, but it's definitely starting to climb, and we aren't even in an official recession yet. Just keep an eye on that. Not for buying a home, not for anything else, just for how people are doing. Philly Fed, we had some mixed numbers today. New orders actually jumped. Prices paid is holding in there at a higher level. Employment jumped. Business conditions jumped. So some of these regional Fed stuff is all over the place. We got some 4-week, 8-week auctions. We have mortgage rates that have dipped slightly with the 10-year dipping. We got Logan speaking. We got Daly, and we got Bowman speaking after the close. Tomorrow, by the way, you got a couple Fed speaks, and tomorrow is nothing going on in terms of economics. You got NVIDIA triggered a double top yesterday, looking to bounce. It looks like the bargain hunters in the mega caps are back, and they're not bargains, by the way. That was a little sarcasm. But after the sell-off, let's try to pick stuff up cheap. Oh, he had a bigger pullback. But this is good. This is good because I'll show you exactly what I'm looking at the NASDAQ. So that's where that sits. So we're going to get that rotation back in there. Technology comm services leading it higher. Fed watch still favors September cut and the rapid cutting schedule. But the market is, we're going to have a soft landing as long as they do a rapid cutting schedule because things are falling off a cliff. Doesn't make sense to me, but it doesn't have to. We're still in extreme greed mode. Or, sorry, greed mode, not extreme greed mode. What am I saying? We had TSMC report this morning, little bounce up. We have Netflix after the close. Tomorrow we got American Express, Halliburton, Fifth Third. I mean, the biggest thing will probably be American Express, but nothing that's going to really shake the markets, it looks like. So tomorrow looks like a very quiet day. Hey, Charles. So, by the way, this is TSM. So, was this tradable? Not really. This was a valid potential double because these levels did not poke up high enough to invalidate it. Let me show you. See, there's a 4-hour double. It had to get back above. Let me reverse that. It had to get back above the 75 to invalidate it, which it did not. So this did not invalidate it. Now, could it be traded? Well, unless you tried to front run it, but it wasn't even confirmed at that point. Could this be traded? No. But if you set it up correctly, that's the point. And then you look and go, okay, went to target, now it's bouncing after earnings. And their earnings were a beat. But here's the thing. Just like I'm going to do in the markets, be paying close attention to this, because if this can't get above this 185 level on a closing basis again, I'm watching for another rollover play. It might even not get to that level because that's going to be very telling. So was that one tradable? No. Could it be traded intraday on, okay, gap down, and I'm going to try to squeak something out on an intraday basis because it hasn't hit all the targets yet? Yes, but that's a whole different topic. Now, S&P hit the 87.5 yesterday. All right, I'm going to flip the harmonics. Now, this isn't as strong as what I'm going to show you in the NASDAQ, but the S&P, since it didn't even break this key swing low, and it closed, if you look at the closing basis here, see, it closed still right at this other prior close from 11th of July, so it didn't even make a significantly lower close. That's why this isn't as important as what the NASDAQ did, but on any minor bullish pattern with daily cycles being at the bottom, we're out of overbought conditions with the divergences, and so far we're holding the daily rotation zone. So if there's a shorter term buy setup, and this is for some, this is a learning. I want people to learn this. And this is a valid potential double bottom. See, it spiked below that 75, and it's a clear rotation down. This would need the close. Let's just go with the conservative targets for right now, and I'll explain why. So it needs at least to follow through with a 4-hour close above 56.64. Now, separate from the double pattern, and look at the cluster with the 50%. So the first target, 56.76. Next target area, 56.83, then final 56.89. But on any bullish bounce pattern, My thing is I have to see closing over the next few days without breaking the new lows. I need to see closing above the 62.5 retracement. Why? Because then my strategy shifts. Okay, if I'm in a short-term bounce pattern, a short-term buy the dip pattern, because remember, we're still in the daily rotation zone, at least on the S&P, then I can start trailing a stop up to retest the most recent highs. Could it still break out higher? Yeah, trend's still up. Now, if we, first of all, I need some kind of bullish pattern. I just don't go in and say buy it. It's going up. I need something to trigger an entry for me. Why? Because we could roll over and still pull back further. We could continue to pull back further into the daily rotation zone. We could theoretically pull back further to 5,600 before making a buy pattern. I don't know how this is going to trigger. I have to wait for a setup. But on whatever setup's going to do, and this is the same, even if we went lower, I just ratchet down the harmonics. On any bullish setup, I needed to still close above that 62.5 level, because then I can continue to trail for a retest of the high area. Okay? If that makes sense. And therefore, I'm still putting the probabilities in my favor, and the trend could easily continue. Now, if we don't get a bullish pattern triggers, or we roll over lower, I have my next key targets lower, because technically we don't have a buy the bounce pattern for me yet. We are at daily cycle bottoms, but we still have weekly cycles at the top. So this bounce could be short-lived, and we could get another rollover. That's why I'm watching these levels. I want this to make sense to people, because this way, well, how do I know if I buy the dip? How do I know? Well, the long-term trend is still up. Is it a risky long-term trend at this point? I should say the medium-term trend is still up. Is it risky? Yeah. Is it on a little shakier ground? Yeah. But then the trend is your friend till it ends. But this is how I get a potential bottoming pattern. Now, could this potential bottoming pattern trigger, and then the market just roll over and take out the lows and invalidate the pattern and takes a loss? Yes, that's part of trading. That's part of trading. But you don't know that's going to happen. Or this pattern might never trigger. NASDAQ is what I love. Why? Because now we've actually got below, so we're technically in neutral mode. All right, so I need to wait for the bottoming pattern. This is more a flag pattern just yet. This would not be a double for me. It's really just a flagging pattern. So if I'm going from the bullish side, I gotta watch for a more significant bottoming pattern. But look at what we did with the NASDAQ, which has been, remember, with AI and tech leading on the way up. From a closing perspective, we're starting to do some technical damage. We closed below this prior resistance highs that it broke to new highs from. We closed below it. We're still above this close from the 24th, but look at the recent closes. It's on down. So we have formed at least possibly a little mini ABC correction. We're in neutral mode. When's the last time we were in neutral mode? Look at this. We haven't been in neutral mode since the bigger pullback in April. All right, when we went flat and then had the little sell-off. Also remember, on that pullback, I just want to show something else. If I'm teaching too much, I think this is more helpful than going through just key levels today. But on this pullback in April, remember, how do you know it's not going to keep going down? Well, there could be some buy patterns in here. All right. There's also, we closed above the 62.5 back here on this little retracement. All right. And then you start targeting the most recent highs back here, and then it's off to the races. So, worst case is, and look where the 62.5 is here. This is from the highs on the 11th to the lows of yesterday. This does not mean it has to go here. But if it did regain 20,600 on a closing basis, that means it not only wiped out the massive selling candle, the biggest down day in a long time. Look at the candle yesterday. This nearly 3% drop. Look at the size. Look at the size of that candle. When's the last time we had a 3% drop? So that's just a warning sign in one day. Now, if we did get above the 62.5, what have we done? We've not only triggered the 87.5 probability rule, we've wiped out that candle. So then if I'm already in long positions, and there might be other buy setups before we get there, but that's my critical level. We would have corrected this channeling down pattern, okay? We would have shifted the probabilities, we would have wiped out this candle. Then what do? Well, if I'm already in a long position, I'm going to then try to trail it out because the 87.5 level. Does that mean we have to go to new highs? No. But at least I can trail out of position. And if we do get to new highs, I'm already positioned. Why? Because on the weekly basis, look where we've come back to. Nearly the weekly rotation zone. Weekly cycles are still heading down. So could this merely be a bounce so we never get above the 62.5 and we set up for another rollover play? Yes. I have now structured my game plan. Let's say we were to roll over today or tomorrow. I'm just going to ratchet down these retracement levels. I'm going to ratchet down the harmonic levels, and then the 62.5 is just going to go to a different level. And I'm still, as long as this weekly rotation zone's holding, I'm still can watch for the buy patterns. Okay? I really hope that makes sense. But this, you don't need to know if it's going to recover. Also, if it recovers, what's the thing here? We do the reverse harmonics. Because if we do break out again to new highs, where's the key cluster area? 2185 to 21238. 2118, that's my key cluster area. So, you don't have to know what's going to happen. What you can do, though, is set up yourself to know how ahead of time you can structure things. And if we roll over again, let's assume yesterday is a pausing bar at least. Where's my next key target area for a continued pullback? We'll look at the major last pullback lows, look at the forward harmonics. So now I have a game plan. So we have price action and we have harmonics. So if we just bounce and then roll over again, I know the next target area I'll be watching for the next pullback. I've been waiting for something like this to go over this. And this is whatever you're watching. This is the kind of stuff. You're now watching what I call the secondary reaction. You're still trading in the direction of the trend because this trend is still up. Are we in a little more cautious mode in the short term? Yes, but we know what has to happen from price action to shift the probabilities. Not just for a little bounce play, but to shift the probabilities where we could retest the most recent highs and potentially break out again. If we can't, let's say we bounce up to this 50 to 62.5 and roll over again. Then I'm going to watch for retest of this key low because this is a key low from yesterday is very, very key. And if we break it, then I'm watching for the bigger pullback into the weekly rotation zone. There you go. You don't need a lot of magic stuff. You don't need You don't need it. That's just basic price action. So I don't care what your buy setups are, whether they be Bollinger Band, whether it be a MACD, whether it be a divergence setup, whether it be a double setup, whether it be a percent B, whether it be an offset moving out. I'll probably show something else before I call it quits. I'll show you an interesting other little ways you can watch for using displaced moving averages, displaced moving average channels. I'll show that at some point. Remind me. But that, I'm still going to do whatever my potential buy setup is. And if I don't get a buy setup and it just runs, well, then the key level I'm still watching is this 62.5. Remember, hey, let's say we go on a tear today and close, and there was no buy setup in the NASDAQ. We have one in the S&P. But let's say there's not one, and then the NASDAQ closes above 62.5. Well, now the probabilities are shifted. Now I can even look for shorter term setups, at least to retest the high area. Well, that's a good thing to do, Richard. Sorry if I'm going through that quickly, but that's why it's, it's archived. So listen to it. Dow, I mean, this, very overbought. Watching for at least a pause. Russell hit that harmonic. Remember, we did the harmonic area to find the harmonics before the 87.5. Hit that yesterday. And now we're getting the pause there. So we had a very key area right by the prior price action, which is a black line, and the projected harmonic. So we had a cluster there. At least that gave an area to raise a stop. After this is the strongest Russell move, multi-day Russell move ever. Ever. It was like panic buying over the last few days. So that's why it's important to come up with targets. Again, you're not trying to call absolute highs or lows. You're trying to find an area to take an action, whether it be to raise a stop or take off partial profits. The VIX, spiking above, closing above that 14. Now, if we start breaking above this about 15 area, 1490, and then follow through with a close, I'm really going to be focused on the continuing bigger pullback. Other than that, I'm going to watch on this rally how far the VIX manages to pull back. DAX, not really much to talk about. Yes, if it closes above yesterday's high, it's a percent B buy with a tight stop below yesterday's low. From my perspective, again, not trading advice, giving teaching advice. Notes, going to make sure watch on this little pullback. Remember, we still have magnet prices higher, but it's got to hold this 110.25. Not much going on with the 10-2s. Slight rotation so far up today. Dollar index, we still have a potential double bottom, holding the 50% retracement. So this is very key, but the double bottom's nowhere near triggering yet. Crude, this, remember, the channeling double, which officially triggered, this bar yesterday did not invalidate it. So we could still see crude consolidation to a little potential pullback, but I'm more watching for a consolidation area at this point. Gold, we broke out. Now gold, we've already come back with this little mini double, hit the first target area. This bounce did nothing to invalidate it. Could we still pull back and retest the breakout area? Easily. Would not be shorting this pattern. This is more watching it for a pullback and to hold the breakout level for another move higher. Silver, this just really turned into an ugly channel, but I'd just be still looking on a pullback to about 29.91 to 30. Would not be shorting that one either. That's just an ugly, I'm going to even take it off. It's just, ugh. What else do we have? The yen. The yen. So still trying to find, coming back to the weekly rotation zone. So now if we close below the weekly rotation zone this week, then I'll be shifting to bullish mode, especially, neutral mode, especially with the intervention recently and the massive divergence. That does not mean it can't go up. It just means not looking for any buy patterns in the short term. Again, for the spiders and the Qs, use your little short-term harmonic, same as I did on the S&P. Not going to go through that today. So just wanted to point that out. The Bitcoin, still basing right at the 62.5 on the push higher. You still have the magnet price, roughly 69,600. Keep an eye on NVIDIA even after this bounce, because it did technically trigger a lopsided double. Not on the weekly. I really want to see this follow through with a weekly, because it's against the weekly rotation zone. I really want to see it close below 118.04 on the weekly. Now on the daily, I'm watching for the bounce, and if it can't get above 131.75, watching for the next rollover play. Okay? Because it's technically barely triggered the double top, but technically did. 117.99, 118.04, holding at the 50. So if it rolls back over, breaks the 50-day, that would be the first break of the 50 days since back in April. And coming off of a more significant weekly confirmed but not triggered on the weekly basis double top. Tesla, not much to talk about there. It's not really the Trump guy. All right, I'm not even going to go into that. Okay, what else do we have? I'm sorry to go into the open again. I thought that was more important to go through some teaching. Where's the other stock? What was it? AEHR. AEHR Test Systems. Well, that thing has been on a short-term tear. Look at that beautiful double top on the weekly basis. Look at that beautiful double top. So you had a beautiful double top earlier. This is another thing. Just go back when you see charts and, all right, so here's your double top. I'll go through the recent price action in a second. Came down to the final target area. Made a little mini bounce double bottom. It only looks like it could barely get to the first target. But then if we do our retracements, look at this. We held then we started breaking below the 62.5. It shifted the probabilities down to the 87.5 rule. Where did we stall out? Right there. So it completed the 87.5 rule. Closed last week above this, put in a pretty decent sideways base. Closed above the rotation zone on the weekly basis. Got back above the 200 now. So let's take a look. On any backfill, even a backfill to the 17 area, it could be for a potential basing buy setup. Would I be chasing it at this point if I wasn't already in it? No. Very overbought. Cycles at the top. We have a gap below, but I'd be watching for either a sideways correction, and a sideways correction could even take place through yesterday's low. Start closing well yesterday's low. I'd be closer to the daily rotation zone and a partial gap fill at least. But I'd be watching because I could get a continuing trend. Short-term trend is now up. Continuing trend buy pattern set up. And it could be done with a tighter stop. Earnings came out. They were obviously a beat. So this put in a really nice broad base after completing a very key level. And look where it gapped to right here. So you not only don't just focus on this. Look at this. You had another mini double right here. So you had a mini double that then followed through, broke down here. Look at the gap. Look at the gap below this level trying to spike up, but this has became significant. So this is very significant. Learn to read charts. Doesn't matter if you trade the symbol or not. Learn to read the chart. Why is this level significant? Because it gapped down, tried to spike in that level, couldn't even get the full gap closed on that same day below that level. Tried to retest it the next day, sold off. Retested it, gap open, reversal there. Then on the next pops, couldn't even get to that level. Then the sell-off. Well, look at yesterday, gapping above that level, a little dip into it and holding up. So this is the very key level I'd be watching. Key level area right around this 1895 on any pullback. Because this is a very significant area. So I guess the theme for today is work on your plan, learn to read the price action, just pure price action. Key levels, use some harmonics, and you can roughly plan something out ahead of time, coming up with a game plan. Now, no game plan works perfectly, but it's better to have a game plan. You know, you're going into the whatever sport it is. You're going into the football game. Football season coming up soon. You know, you have your plays. Especially a lot of teams map out their first opening drive set of plays. They don't just go out there and wing it. So I have my secondary bounce set of plays. Now, we still have weakness. We still don't have a buy pattern, especially in the NASDAQ yet. Well, this bounce might be short-lived. We don't have the double pattern trigger yet in the S&P. Might never trigger. But I still, if we break down, have my next key targets lower. And then I can update my game plan. With that, I will talk to everyone to wrap up the week tomorrow. I really sincerely hope this is helping people. If you could give me some feedback, just give me some feedback. Send me an email, support@PatTradingPartners, if this kind of stuff helps. I would really like some feedback. I'm trying to get people to a level that they're thinking about stuff, because there's going to be coming up in the future many more significant pullbacks. We might get into soon a more significant corrective phase. So how are you going to know when to more aggressively buy a dip, or at least if you're buying a dip, when to follow through, or when to, oh crap, it couldn't shift the probabilities, we could roll over again. I think that's critical to know, and I think it's critical to understand. You're welcome, Royal Palms. You're welcome, Richard. You're welcome, Heinrich. Again, if you know other people are struggling, even if they don't turn to this channel, maybe share this episode. Tell them to watch this episode only. Tell them to, and they can combine it with what they already know. I will talk to everyone tomorrow. Have an absolute fantastic trading day. Trade well. If you don't have a setup, don't worry about sitting on your hands. You don't have to catch every move. And I'll talk to everyone tomorrow. Bye for now.